Shortly, we'll hear from the Bank of Canada and its interest rate decision. And the Fed is set to announce its own next move this afternoon. Let's get more from David Burrows, President and Chief Investment Strategist at Barometer Capital Management. Great to see you as ever, David. Thanks very much. What in particular will you be looking out for from the Bank of Canada today?
Look, I think it's pretty clear we're going to get a cut. The central banks around the world are one by one cutting. You've got going to get a cut from the Fed as well. I think it's a tricky time because while inflation has been coming back toward the Fed's targets, for the Fed internally, like 72% of the components of CPI are trending at higher than the 2% target rate, and the percent of components coming in above 2 is rising. So it's a tricky time. There's a lot of debt out there, and so central banks do need to cut right now with some of the question marks around employment. But we think that there's a real risk that inflation reaccelerates, and the market kind of is giving us that message.
What about, I got to ask you about Nvidia at $5 trillion US. I mean, I know it's highly profitable. I know they have a dominant position, but in theory, you should only be valuing the company at that if you think it'll earn those profits. $5 trillion in earnings?
Look, it's a tough one for investors because it's such an important stock. Of course, we own it in portfolios and largely have owned it over the last 3 years. And they just continue to beat. The numbers are kind of mind-boggling, and the news just continues to get better. So it's a holding. The truth is the U.S. market is becoming more and more an AI economy. It's sort of a one-way trade. And so we think that maybe it's a good idea to be looking outside the U.S. as well, alongside companies like Nvidia.
Broadly speaking, what is it a Goldilocks environment in the sense that rates are coming down? I know inflation's stubbornly high, but the economy in the south of the border seems to be doing all right, broadly speaking.
Yeah, I think that it is. Certainly you don't ever want to fight liquidity. Liquidity is finding its way into the market, but it's an increasingly selective market. Yesterday was the worst day for market breadth on an up day since 1990. So what do I mean by that? Of the 500 companies in the S&P 500, 100 were up and 400 were down. So 400 companies down on the day, 100 up, but of course some very important ones up. Mm-hmm. We like to see expanding breadth where more and more securities are participating. And the U.S. market has been going through a narrowing as people are becoming increasingly focused in a small number of stocks. That's actually very different than what's happening in stock markets around the world, where internationally breadth is expanding. So we're watching those flows and think that there's an opportunity to diversify beyond the U.S., which of course everybody owns. And if you're a Japanese pension fund and you've been buying U.S. stocks in U.S. dollars because it was the only game in town, you now have a local market that's outperforming and a currency that's appreciating. And then we think that's a decent combination as well.
You have some stock ideas for us. Start off with Banco Santander, if you would. A lot of their business in Latin America.
Yeah, so this is a global bank. It's the largest global bank outside of the U.S. It's the largest position we have at the firm. And we really like financial services because when short rates are low and long-term rates remain stickily high, the banks can make a decent margin. So Santander trades at about 9 times earnings, say, versus JP Morgan, which is like 17 times. So considerably cheaper. It's got great internal growth. They're getting a large amount of their growth through fee-related income like management fees and advisory fees and banking fees. They reported today they came in better than expected. They say they're on track to hit all their targets for 2025. They are increasingly raising their dividend. We like dividend growth as a theme in this market. Frankly, it's outperforming the North American banks.
Caterpillar just reported, classic cyclical stock. Obviously, construction, one of their big businesses, also mining.
Yeah. Well, so for those that have been following along, we've been fairly focused
Wow.
on the precious metals miners over the last couple of years. Now, in disclosure, we stepped away over the last 10 days, and we think maybe there's time for a little correction in the golds. But longer term, we're very positive. The big equipment companies tend to lag the commodity cycle by about a year, and both Caterpillar and Finning are definitely participating at this point. But boy, the Caterpillar earnings were great. They were expected about $4.50. They came at $4.95. Their order volumes grew 25% year over year. So as the resource companies are becoming more cashed up, of course, they need to buy equipment. The dealer inventory is declining. And interestingly, they do have a business that is the fastest growing business that nobody's talking about. And they have a gas turbine power generation business, which is sub 100 megawatts. And they are selling these into the data center market, which is a hidden growth engine inside Caterpillar, which we think they will start talking more about over the next little while.
That's interesting. Yeah, that I think not many people know about that whole power equipment line angle to Caterpillar. We're very tight for time. Tamarack Valley, what's your take on that one?
Yeah, look, energy's been in purgatory. There are a few leaders. Tamarack Valley is a leader in the Clearwater. They've been using water flood technologies to stimulate their wells. They just continue to be a leader, continues to make new highs. And we want to own the leaders as energy starts to come out of this funk that it's been in.
Thank you very much, David. Always great hearing from you.
Thanks for having me, Andy.
David Burrows of Barometer Capital Management.